Happy Friday, folks. Anthony Special here with Special Analysis for another edition of Unedited and on the Edge of the Market. Hope you're having a wonderful day. Hope your week has been well. I know it was a short one for the holiday. Hope you're geared up for this weekend. I mean, summer's officially here. For me, it normally kicks off around Memorial Day. But, you know, 4th of July is really like the official start of summer. School's out. Kids are running around. Beach is packed. You know, for us here in New Jersey, you know, it's all about the shore, you know, where I typically gravitate to the mountains during the summertime, and then I gravitate to the shore after all the kids go back to school. That's typically how we do things in my house. I'm sure all of you have your own, you know, way of celebrating summer, celebrating the season. But we gravitate, again, to the mountains. It's a little more quiet there. It's a little cooler there. So we really enjoy that during the summertime. And then in the wintertime, I shouldn't say the winter, but in the fall, we like going down to the beach, you know, while everything's still open. And, you know, it's much less crowded. It's much less busy. Everything's a little less expensive. But, you know, it's really about the ambiance. You get to enjoy it with a little less people. So that's the way we do it. I'm sure, again, you all have your own, you know, based on your demographics and geographics, you have your own, you know, approaches to the way you complement to summer. But we're excited about it. I was actually upstate New York last weekend. I played a little bit of golf, you know, had a little campfire, had a couple scotches, smoked a cigar. It was just really nice and relaxing. It's something that I've cherished for a lot of years, and I hope you guys are taking the time to really enjoy yourselves, your family, take these weekends and really embrace them. You know, we typically don't work on the weekends around here, especially during the summertime. We try to enjoy each other. We work hard Monday through Friday. Most of the time, they're 10, 12, 15-hour days. But we love what we do, and we enjoy it, and it's rewarding. So, you know, we continue to do it, but we also know that life is short, and we need to have as much time with each other and enjoy each other as possible. So those are just some thoughts I wanted to share with you as we enter the weekend. I'm also going to share a trade with you today. We're going to look at a trade on copper. So those of you who you know know me know I run a weekly market report. This weekly market report covers essentially all corners and sectors of the market, everything from individual sectors to individual commodities to indexes to cryptos to bonds and things of that nature. And then beyond that, I also offer a bonus stock spotlight report as well. You know, with this, I give you all the information. I give you the drawn analysis, the interpretation. I give you, if there's a trade idea, I give you the pros and the cons. I mean, listen, I can't advise you what to do, but I can tell you, say, hey, listen, I like this about the trade, but I don't like that. My job, my goal is to give you the information that you need so that you can make the best decisions for yourself. That's what I'm here to do. So it's, you know, this is not a get-rich-quick scheme. This is not, I'm going to promise you the world and under-deliver. You come to me for information. I give you that information. You decide what you're going to do with it. This is not an advisory service, you know, so don't misconstrue that. But the readers of my weekly report had the opportunity to capture 2 consecutive moves on copper. And I think it gave them about a 13% return on investment in just a couple short weeks. So I want to show you the setup, and I want to show you how we kind of executed it so that you had a little bit of insight here to the way this actually played out. So I'm going to open up the screen here, and we're going to take a quick peek, just maximize it and get my screen set up. So, big picture here. You're in a nice uptrend. Trend breaks, we complete what's called a full channel extension. So we create a channel, and then we see that channel extend. So sometimes it's easier to draw new channels, sometimes it's easier to draw extensions, depending on the scenario. Kind of gives each different opportunity. So that comes with experience. There's no harm or shame in it. It's just a matter of, you know, your ability to look at the chart and just decipher when and where you should find these structures. I do this, of course, for my readers because this takes hours. You know, for somebody who doesn't know how to do it as quickly and efficiently, and it's a skill set you can learn. It just takes a whole bunch of time. I do this for them. That's the value in the service I offer. I give them the information. So you can see, big uptrend here. We break the uptrend. We complete the extension. The trend starts to break. The orange structure starts to run a little more sideways, if you would, and then that's when we get back into the action here. The trend starts to turn. So we set some lower highs, some lower lows to work off of, and this was our confirmation right here. So this was our sell signal. That's confirmed by more than 1%. That's our 1% way to wealth rule that we use. So it's about 3.21%. This is the signal to sell. So this is where we sell. This is where we place the stop above the structure in which we broke from. So I really like these retests. So you can see price, tested it. So this is your impulse. This is your correction. This is your follow through. So we closed below this prior low. That really gives us a clear and defined indication that, hey, this thing, should accelerate. Does it always happen? It does not. But in this case, it did. So this was our sell area at 24.35. You can see you had plenty of opportunity to get filled at that price or even with slight improvement. And you can see the price pushed down, to our target. Our target was placed at 23.10. So that offered us 5.12%. We can live with that. That's not so bad. But what happened with the week that this closed? Well, it confirmed again. It gave us another confirmation. We closed outside of this yellow channel. So we measure from the yellow channel to the close there. We got another 1+%. And this triggered the opportunity to then sell again. So we did. Gave us another 8.28%. So I add 5.12% and 8.28%, and I have two trades totaling 13.40%. Now this all happened in a matter of 1, 2, 3 weeks. Listen, do you have to be a little patient here? You do. These typically don't happen overnight. Remember, we are looking for weekly confirmations. Why do we like weekly confirmations? Simply because they offer a greater level of strength. I prefer to take trades that have the highest probability of working out. Does that mean that they will work out? No. Statistically, using this 1% confirmation, statistically using a weekly confirmation, should yield us somewhere between an 80 to 92% success rate. Now, understand something. Those studies were performed over a 10-year period. I am sure there are periods of time where it did not work as well, and I'm sure there are periods of times where it worked flawlessly. So, do we ever know which of those periods we're going to be in? Not always, but we try to stack those odds in our favor. You see there's one moving average, one line running through the chart. I only use one line. The reason I do that is it's just easier to help traders define what trend they're in. That line represents the 200-day moving average. If we are above it, we are looking for long opportunities. If we are below it, we are looking for short opportunities. If we are hovering around it, we stay out of the market. Simply because, there's some indecision in there. You can see as the market really grinded higher, here's your COVID low, broke the 200-day, and the market then proceeded to impulse, consolidate, impulse, consolidate, impulse, consolidate, impulse. That's what happened. That's an identifiable uptrend. Then we entered a little bit of slop here, which you could see. That slop ran essentially sideways, and you could see that 200-day moving average started to run through it. Then we started to significantly close below it with structures that were pointing to the downside. And then we identified areas of targets. So that is the ideal way to stack the odds in our favor so we could get as close to those 80 to 92% success rate trades. So this one worked out really well. Very pleased. I believe my readers are very pleased. We're not looking for 500, 800, 200% moves on the stock. We are looking for 5, 8, 10, 15, 20, 30% moves. Why are we looking for those moves? Well, because A, they're going to statistically happen quick. The quicker we're in and out of the trade, the less exposure we have to geopolitical things that affect the market. A. B, we know that if we can take these wins and compound them, meaning if we start with, let's just say hypothetically $1,000, we just made 5%. Now we've traded with that $1,000 plus the 5.12%. Now we've just earned another 8.28 on top of that. Now we've added that, and that we build the pile slowly by taking one consecutive win after another, adding in the rewards. That's called compounding. And you would be wildly surprised how quick you can make a lot of money. And that is how retirement accounts are essentially built. If you want to get creative in the financial industry, compounding your returns is the way to make money. So that is the purpose of the way we set these up. I do also often offer option proxies. I know some people prefer to buy options. So we only deal with buying options, buying calls to go long, buying puts to go short. If you have the wherewithal and insight to sell options or put spreads in place and things of that nature, by all means, that's up to you. I keep it relatively simple, and for me, it's always about managing the risk. So if we can manage our risk, that is always the best bet. So with that said, I appreciate your time today. I hope you learned something. I hope you got a little bit of insight to the way I approach the market. If you'd like to learn more about the weekly market report, below this video in the email, there is a couple links. You can click on one of them. You'll read a little bit about the service, a little bit more about myself. If it's something you decide you want to get into, fantastic. I welcome you. If there's something you have questions about and you'd like to have a conversation, feel free to email me. We can schedule a phone call if needed. I'm really here to help you. So if you're interested, great. If you're not, again, I appreciate your time. Thank you very much, and I hope you have a wonderful weekend.